U.S. ETFs enjoyed their best year ever. Total assets under management in the sector hit record levels, and inflows of money into U.S. exchange-traded funds grew at an unprecedented rate, reaching $899 billion in 2021, $266 billion of which was added in the last quarter of the year. Equity-traded ETFs are the biggest sector in the U.S. ETF market, and SPY, the S&P 500 tracker, is the largest of all U.S. equity ETFs. Flows into SPY in Q4 reached $34.42 billion. However, markets sold this week following the release of the minutes from the Federal Reserve's December interest rate meeting. Rate setters believe that it's time to tighten monetary policy by reducing stimulus and raising interest rates. Growth and technology stocks are unlikely to perform well in a rising interest rate environment. January could prove to be a bumpy ride for many large-cap U.S. equities and the funds that track them. Cathie Wood's ARK Innovation ETF has a concentrated portfolio focused on one theme that performs very well when in vogue, but equally suffers badly when the market falls out of love with that theme or sector, and it too has had a down week. As we've noted before, Cathie Wood's strategy is a long-term one, and she and her team believe that the stocks in the ARK Innovation ETF are capable of great things over a 5 or even 10-year time frame. She historically tops up some of her holdings on dips if she has the cash available to her. TLT, the iShares 20-year plus Treasury bond ETF, has been trending lower over the last month and has lost 7.41% over that time. That suggests that the long end of the bond market had anticipated or priced in the news from the Federal Reserve ahead of the event. Unsurprisingly, TLT's price is closely aligned with that of long-term U.S. Treasury bond futures, and in particular, the so-called ultra contracts, which track U.S. government bonds with at least 25 years to maturity, and the path of least resistance for both prices looks to be lower from here. Oil prices had a torrid time in the closing stages of 2021. West Texas Intermediate crude traded as high as $84.65 a barrel and as low as $65.57 in the last quarter of the year. USO, the U.S. oil fund which tracks the price of WTI, had an equally mixed performance, trading flat over the prior 3 months, but gaining almost 15.50% in recent weeks. That's driven by a pickup in oil prices thanks to tensions on the border between Russia and Ukraine and violent protests about soaring energy bills in Kazakhstan, demonstrating that political tension has resumed its role as the major driver of energy prices. For the moment at least, concerns about falling demand caused by the spread of the Omicron COVID variant have been put on the back burner. Kazakhstan is among the top 20 global oil producers, and any interruption to production would likely drive oil prices higher once more. XLV, the S&P 500 healthcare ETF, also fell victim to sell-off in growth and tech stocks. And as we've mentioned before, the sector is made up of two distinct groups of stocks that couldn't be more different. Firstly, there are defensive stocks such as the major pharmaceuticals healthcare providers. And at the other end of the spectrum, we have biotech, biopharma, and high-growth stocks. The latter group helped to pull both the sector and XLV last week.